Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So happy new year. I hope you're feeling well after the furious celebration of the New Year's Day. So today, guys, actually markets are closed, and we could quietly take a look at the Bitcoin, because Bitcoin we're considering 2 times per week. So that's why some changes has happened since our last discussion that we have taken on Thursday. Now we're stepping in a new year, and as it is widely anticipated, the Security and Exchange Commission should provide the approval for the ETF, and markets right now really hope that it will happen in January. On that background, it's making impact on actually performance, that market stands quiet, and we do not see really some progress on the performance on the monthly and weekly chart. So only some changes have happened on intraday charts. And I would say that, well, currently it's maybe not a good idea to make long-term forecasts, because for that purpose you have to know what will happen on the ETF, because that will definitely become the major driving factor. But at least by the technical picture that I see right now, I would say that market more bullish rather than bearish. So of course, if we will not get any improvement or some other negative consequences will happen, situation will change rapidly. But with the information that we have right now in place, market tries to keep the bullish context. So first of all, starting from the monthly chart, what the changes here, levels are the same, but here, guys, we have updated yearly pivot points. So if you're using it or just watching for it, that's the new pivots for 2024. Here's the pivot points. Pivot resistance 1 agrees mostly with the 1618 extension target. So we have. So here is a 5270 approximately. This is 5120. So very close. Another important moment to say on a monthly chart, that market has closed above the yearly pivot resistance 1 for the 2023. So it was somewhere in this area. You probably remember this chart, around 42. And market has closed above it. Usually when this happens, it tells, at least from the pivot point of view, that this performance that we have, despite that it's taken the shape of the ABCD, this is not retracement of the previous downward action. So this is starting of the new bullish trend. That suggests a further upward continuation. And from that standpoint, it really could happen that market will take it out of the stop somewhere through the year, maybe this year, maybe next one. But that just tells that probably might become not just a retracement, because usually when the market shows retracement, it retraces right to the pivot resistance 1 and then starting downward action. If this hasn't happened, market close above it, it means that probably this is not just retracement. So that's a few changes that we have currently on the monthly chart. All other stuff stands the same. So these levels, market right now stands quite around 42, 43 area. So its performance mostly remains intact. So on the weekly chart, I do not see something really new. All moments, important moments here we already have talked about. Acceleration, potential to Napoli patterns, print bar double repo or something. The one thing that I would like to mention here is take a look here. We have tight standing around the OP target. Those of you who are watching our videos, you probably remember the same situation we discussed last week on the dollar index, but it was in the opposite direction. Market was calling around the XOP, downside XOP, and it was taking this absolutely the same pattern. As you can see here is tight pennant is forming. It easily could be recognized. So just for a moment we'll close the moving average. Just do not mess us. So here you could see what's happening. Usually when the market reaches the important target and turns to the sideways consolidation, especially in the way of the bullish continuation pattern, which is a flag consolidation or pennant as we have here, so that's obviously the bullish sign. Besides, it seems that market is not that overbought, so it's only the resistance that we have here at 50% on the monthly chart. That's what we have. Actually, it takes the symmetrical shape on the fall FM chart. So we'll take a look at it. We have this triangle shape here, and actually all our analysis that we have prepared in the previous couple of weeks stands on the background of this triangle. So context remains bullish until market stands inside this range and keeps triangle valid. If we see that market just collapsed and taken out of these lows, that significantly increase deeper downward direction. So for now, based on this performance, we can't say that the bullish context has failed. What really some tricky moments exist here. First of all, if you take a look at the daily chart, it is not pleasant fact. We already mentioned it as well, but still we have the bearish grabber. And actually, currently you can see that market is following it relatively accurately. So despite that we've got really solid bounce from the level that we have discussed in on Thursday, still later market has dropped more, and grabber suggests taking out of this area. In what manner this grabber could work, difficult to say. So it might be just spike down on some speculative games in the moment of the improvement of the ETF, some news might be released or something. If it will be just occasional completion of the grabber and market will return right back down, right back up fast, in this case we could say that probably bullish context intact. But if market will take it out of these lows and just will remain there, breaking the confidence support, that's definitely will be not good sign. So this is really some kind of the headache for those who would like to take the long position. And until this grabber is well, it will keep you in some tension. So it doesn't mean that you can't take the long position currently, but you have to intentionally take this risk. So if you're ready for that, you should understand that for what you are paying for, and that this is some potential hazard exists. If it's not suitable to you, in this case, better to wait to see it sit on the hands and see what will happen. So you need to wait when this real upward continuation starts. It will show us in some upward strong action, something this kind, and then try to take position on some pullback. This is conservative approach. If you still would like to take the position at the better levels and you would like to take some small risk, not necessary to put the stop somewhere below this area, although it's also not forbidden, but you could use some other patterns to deal with, but at the same time when the risk will be a bit smaller. For example, if we'll take a look once again on the hourly chart, you could see that here we have the money hand shoulders. Last time we were considering this head and shoulders pattern. Remember this shoulder, head, and we said waiting for 42.50 area. You could consider taking the long position if you would like to and you're ready to take this risk. Right around the shoulder, you can see that in general this was pretty nice volatility, and market was showing has shown here some normal pullback around $1,000 per coin. So it's more than enough just to protect your position with a break-even stop. And if even market later fails, well, this was not really mistaken. Theoretically, this was good area to consider taking the position because it carries really small risk of direct loss. So the response still has happened here. That might be the similar situation, mostly because of existence of the grabber on the daily chart. So risk absolutely the same as with these hand shoulders. Could these hand shoulders fail? Obviously yes. So this is possible. But at the same time, your risk will be just below this area. You do not need to hide it right there. So because this will be invalidation moment. So if market will just drop and break in the right arm, it means that it will drop below the head. So it's not necessary just to hide stop too far. That will save some money. At the same time, if you will be right and market starts upward direction, maybe it will be a bit deeper retracement, for example. So you could get a good position. So that's some kind of the balance between the risk and reward. So if you take this risk, you would like to take position at a better price, but you will have to pay for that. And you will take the risk of the grabber that we have on the daily. If you do not want to pay for that, just do nothing, wait when the market will show evident upward acceleration, and then try and take position in retracement. Finally, on the daily chart, we also have pretty nice divergence that is forming here. So maybe in this case, if even we will not get the direct upward continuation, but maybe pullback here may be a bit better than right there. So from that standpoint, those of you who are considering taking the long position, that's one of the scenarios that you could consider, although it is not totally flawless. So here's some tricky moments exist as well. So okay, that's enough from me. Just enjoy the holidays. Just do not want to bore you too much with this stuff. So the whole year ahead, where we will keep doing our work together with you, following the markets, providing analysis, and everything that we usually do in our forum. So see you. Bye.